Okay, then we actually do the legal work and get a deed for the superannuation fund. Okay, a deed is more a legal document that governs all the rules that your super fund can and cannot do. Okay, so you tend to find that the actual deed, I guess, replicates the current superannuation law. Okay, so what we try to do with deeds is, as time goes on, superannuation law changes, and as superannuation law changes, your deed may gradually become out of date. So what happened was a number of years ago, when the law was changed that allowed superannuation funds to actually borrow, a lot of the old deeds that we had didn't, because the law wasn't even in existence at the time, those deeds didn't actually say anything about borrowing or allowing a superannuation fund to actually borrow. So the law said one thing, because it was a new law, and your deed said pretty much was silent on the whole thing. So what we had to do is we had to update those deeds to pretty much replicate what the law actually now has been changed to. Okay, so and what we try to do also is we when we set up these funds is we try to subscribe. We get the client to actually subscribe to a what's called a deed update service. So every year you may find 5, 6, 7, 8 different types of law changes, superannuation law changes that pass through Parliament. We then ensure that your deed is automatically updated to replicate any new laws that come through. So in other words, your deed is always up to date, year in, year out. Okay, and you're never left with that scenario where your deed is misaligned with superannuation law. So we'll call the superannuation fund Nada and Tony Super Fund. Okay, so we've set up the trustee company. This is the deed that we've got, a legal document that's been prepared for you. We then assist you in opening up a bank account. Okay, because remember we're going to transfer this money from where your respective funds over into this super fund. We have to bank the money somewhere. So we open up a bank account for you guys. All right, so again, there's no hard and fast rule which bank you go with and whatever it may be. What we always suggest is be mindful that this money is going to get rolled over into the bank account. You don't want a traditional checking account that's paying you very little interest and charging you $20 a month for pretty much having a bank account. So be a little bit I guess cautious to have a bank account opened up. It's going to pay some interest rate and be very, very minimal on fees. Okay, so the bank account's open. We go through and actually get an ABN number for the superannuation fund, a tax file number for the superannuation fund, and so on. Okay, just like I've got here, ABN tax file number is pretty much applied for. Remember, it's going to be a separate entity in its own right. So it's going to have to do a tax return at the end of every year, as the financial accounts every year. Okay, so if it's going to go and buy a commercial property down the track, and we have to then consider the GST implications, whether we actually have to register the super fund for GST. Okay, but just keeping it simple, let's assume we only want to buy a residential property. So we pretty much apply for an ABN number and a tax file number for the superannuation fund. Okay, so we've gone through all that. We then write to REST and write to Australian Super. Thank you guys. We are now requesting you to roll over that money and roll it over to our own family superannuation fund. And what they then do, they just do a few, I guess, cross-checks to make sure it's a legitimate fund. It's a compliant fund. It's been registered, has an ABN number, and so on. It's not a fictitious fund and whatnot. And when they do their cross-checks, and if they're all happy with everything, they then issue a check to the trustee, and those checks then are banked into this particular bank account. And now we have $150,000 that's sitting in this superannuation fund bank account. Okay? Now, we are mindful when we do rollovers, we are mindful that sometimes clients do have life insurances sitting in these funds. So before we just go and roll over all the money and ignore what's going on here, we try to, I guess, get the last or any statement or a recent statement from REST or Australian Super and try to dwell on the fact that you may have some life insurances within these funds. And we don't want to just go and roll the money, just cancel these off and then find that you can't get life insurances if you still wanted those life insurances going forward. So if we find there are life insurance policies within these funds, we leave a small amount of money in these funds to ensure that we keep the life insurance policy alive, and then going forward we address the matter with you to see whether you want to take out life insurances owned by your self-managed super fund, and then gradually cancel these and roll the rest of the money over. Okay, but that's just something to be cautious of, that we're also cautious of, because we don't want to be going cancelling life insurance policies without or accidentally cancelling them and without your knowledge. So what we've done is just simply set up the structure, and we haven't got to buy the property yet, but we just set it all up. We've got the money sitting there waiting for us to buy the property.